Hello and welcome to Crux Investor. We got up earlier today with Tony Barresi. He's the CEO of QuestEx Gold Copper. 23 million market cap today, in the process of raising another 8.8 million bucks. We're talking about what he plans to do with that, plus two new strategic investors in the shape of Skeena Resources and also Lundin. In the Golden Triangle, they talk through what they're going to be focused on, where they think the value, near-term value creation comes from. And if you want our thoughts and opinions on the conversation, the company, the man himself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of companies and commodities, including gold and copper. We've got training courses on there to help you with your diligence process. We've also got summaries of interviews that we've done. In fact, all of our interviews, just to save you some time, because we know you're busy. But most importantly, you should try to join a thriving group of investors sharing their thoughts and ideas in a nice, friendly and safe environment, free from judgment, trolling and abuse. And you can do that at cruxinvestor.com/club. We'd love your feedback too, so give us a like, be appreciated. Leave your thoughts below, get back to everyone. If you want to see precisely what we talked to Tony about today, do take a look in the description below. Tony, how are you, sir?
I'm great, thanks, Matthew. It's great to get a chance to catch up with you and Crux Investor.
Well, fantastic. We saw you at the beginning of November. It's been an interesting market for sure. How have you been keeping yourself, though?
Great, Matthew. You know, I've been holed up in my home office since we last talked, but the company has been progressing in such a fantastic way. We've been, including myself as part of the technical team, we've been digging deep into the large amount of data that we have from our many properties in British Columbia, prioritizing those targets, planning an aggressive multi-property drill program for this upcoming field season. And you know, our share price is headed in the right direction right now. We're raising the big bucks that we need for our exploration program, and things are looking up for QuestEx.
No, it's good. It's good. That's why we wanted to have you on the show. You're bucking the trend that most precious metal graphs are heading a little bit south at the moment. Well, look, why don't we kick off for people new to this story with that summary of what it is, 1 minute summary of what you are, and I'll pick it up from there with some questions.
Sure. QuestEx Gold Copper is an exploration company. We have one of the largest portfolios of properties in one of the top tier districts in the world, British Columbia, Canada. Most of those properties are in one of the most well-known and prospective mining districts in the world, the Golden Triangle. And we have we're a newly assembled management and technical team who are doing deep dives into the data from these properties. We've been prioritizing the targets, and now we've planned an aggressive multi-property exploration program for this upcoming season. And really, that's what the bread and butter of exploration companies are. You can't just say that you have properties that you think that have gold on them. You have to get out there and find that gold. And that's something that this company hasn't done in a number of years. It's not priced into our current value, but we're getting out there this year and doing it. And so I think, you know, we're going to see some appreciation from the market just from the fact that we're getting out and we're going concern as an exploration program company now.
Fantastic. Well, look, we'll point people to, and we'll put a link below in the description to the last interview we did at the beginning of November, because we got into some detail there, you know, the historical and business plan and strategy and the team and so forth. So I would encourage people to go and have a look at that. I'm interested in what you've done since we spoke. I'm reading, well, obviously, as you say, share price up. You've gone from 54 to 93. That's a nice movement. Market cap, you know, 23 million bucks. So people are starting to take notice of what you're doing here. We'll get into the projects in a second, but you've had a couple of new additions to the team in the sense that you've got Skeena and Lundin involved now. I mean, what did they buy into?
Yeah, you know, if you take a look at exploration companies that are exploring in the Golden Triangle, if you've got one good property and you're planning on doing an exploration program on it in 2021 and it's already funded, your market cap is 40, 50, 60, $70 million. When those guys at the start of our financing, our market cap was around $15 million. That is a huge discount for a going concern explorer in the Golden Triangle. And we don't just have one property in the Golden Triangle. We have the third largest land package in the Golden Triangle, behind only Pretium and Seabridge Resources, both of which have multi-billion-dollar market caps. So, those guys saw the opportunity as an investment opportunity, in addition to the strategic placement of their funds into our company in case we have the real reward at the end of all of this, which is finding a mine. And especially in the case of Skeena Resources, our KSP property is located exactly in between their two development projects, Eskay Creek on the one side and Snip on the other side. They're probably going to put a road right across our property to access Snip. So what are we doing on that property? This year, we're defining a maiden gold resource for our Enel showing on that property. That makes a lot of sense for Skeena to want to have a piece of that, because looking at this thing as a regional play, which is really what the big players usually do when they get into a district, it makes a lot of sense to have another deposit in between two that they're looking at developing, as well as a large prospective land package. But in the end, it's also just a pure good investment, because we haven't seen the appreciation that so many of our peers have from just going about the general business of exploration in the Golden Triangle.
Right. Okay. Large land packages cost money to work. Right. You've noticed the release recently. I think you've just slightly upsized it to what must be $8.8 million. You're going out to market. Why?
Right. Okay. So our technical team has been working really hard to identify the targets that we want to explore this year, and looking at what reasonable exploration programs will be, what we can execute with the team we have. And we've identified basically two really top tier priorities. And to execute on those, we need between $5 and $6 million. And that's what we're raising in flow-through funding. And frankly, the extra funding, which could be earmarked for exploration this year or next year, and also cover some of our G&A expenses, that's funding that is above and beyond what we needed for the exploration, but it's really what we ended up taking to get these strategic partners into the story.
It's interesting because, we talked about 22, 23 million market cap company going and raising near down at $9 million. Saying so many shareholders are going, oh, it's quite dilutive. Why take it all in one go? Why not, take a little bit less, work it up, create some more value, and go and raise some more money? So, is this decision driven by you and the board, or is this driven by a strategic investor in the shape of Skeena? And is that in your interests?
Sure. No, that's an important question. I mean, when you're looking at financings, in our case anyway, you're looking at multiple potential opportunities, and none of them are necessarily exactly the opportunity that would be perfect for you. So you have to weigh the different opportunities against one another. And when you bring in a strategic investor, rather the terms that they come in on are a negotiation. It's never just exactly the way that you want them to come in. So was this financing a little bit more dilutive than what we needed to do our exploration program? Yes. Was it worth it to bring in these strategic shareholders? I say yes, and I think the market has said yes too, because we did the financing at 60 cents, and what are we trading at today? Like 93 cents or something like that. So I think it was the right choice for us. And there's never anything wrong with having some extra money in the treasury so that you're able to do a good job of planning the future year's exploration program. The other thing I'd like to point out about this financing is that there was no warrant attached, not a half warrant, not a full warrant, no warrant. So if you look at other financings that companies are doing that are, say, less dilutive than ours, a 20% dilution or a 15% dilution, something like that, Well, those financings often have a full warrant attached. So on a fully diluted basis, they're twice as dilutive as what they are at face value. And when you're looking at the kind of growth that we think we're going to end up having in our share price, our market cap, that is a big hangover in the end. So I think it was really quite strategic of us to be able to do this financing without a warrant attached.
Okay, and I agree with that. It was best without. So let's talk about where you're going to spend your money, because you've got to need some. It's all great having a big district, right, and having multiple targets and so forth, but you've got to get focused and will prioritize your spends, as to where you're going to see the biggest return. And I guess with new strategic shareholders, they're going to have a view too, right? So what strategy have you decided on?
Sure. Well, it's a gold bull market, so we're exploring for gold. We have tremendous opportunities for copper gold porphyries on our properties as well. And I'm really excited about those opportunities. And we'll be quietly advancing those with mapping and geophysics, geochemistry, less expensive methods. But those aren't what we're really advancing this year as far as drilling goes. We're looking at the low-hanging fruit, Matthew. So on our KSP property, we have what I believe is the most advanced gold project in all of the Golden Triangle that does not already have a resource. This thing has 1.25 kilometers of underground workings, 40,000 meters of historical drilling. It's called the Enel Gold Showing. And so again, this is in a district that has massive, very rich gold mines, Eskay Creek, Snip, Brucejack. And this is the most advanced project in that district that does not already have a resource. Well, there were a couple of things that were holding it back from having a resource, and we've now overcome all of those hurdles. We're confident that even without drilling this project, we'll be putting out a maiden resource for 2020 this year on the Enel Showing. But we're also going to be drilling it because there's some areas that have very high grade mineralization, as well as lower grade broad areas of lower grade shoulder mineralization that we're not able to include in the current resource, even though we know they're there because of the nature of the historical drilling. So we'll be making high grade intersections, long intersections. We know we have a high degree of confidence that we will be doing that because of the historical drilling. And through the process of doing that, we'll be increasing the grade and the tonnage of this maiden resource before we put it out. So that's what we're doing on our KSP property. But we also want to expose our shareholders to real discovery potential. And there's a great grassroots target on our Sofia property in the Toodoggone district. This is another one of our 100% owned properties, 91 square kilometers in a really hot district. And the real model for success in the Toodoggone district right now is drilling low sulfidation gold silver veins. This is what Benchmark Metals is doing at their Lawyers project. If you look at their share price last year at this time, it was like 20 cents. And they went on to their Lawyers project, started drilling these gold silver veins, and now their market cap or their share price is like $1.50 or something like that. Huge appreciation from the market for the work that they've been doing. Now, we have a very underexplored gold silver low sulfidation vein system on our Sofia property. It's mainly been explored by drilling over about a 225 meter strike length, but it extends 4.8 kilometers in strike length. This is a big system. And even with just the very limited drilling that's been done on that system, there have been some great results. So like 21 meters of 3.5 grams gold and 22 grams per ton silver. That's the kind of result that Benchmark is putting in the headlines of their news releases. So we're going to be getting onto that property and really doing some great work to expose our shareholders to potential new discovery.
Right, but it's got to come back to the model that you're going to employ, which is because you've got multiple projects, you're going to focus on these two. So let's come back to like KSP, for instance. You're going to come up with a maiden resource of what size are you going to be aiming for? What would good look like for you? And who you really talking to? Because you don't want to use your balance sheet. You want to bring partners in who can and move projects on at some point. So what do you hope to be able to go to market with when you come with your maiden resource?
Sure. So, I mean, I can't speak to what I actually think the resource is going to be because it's not out yet. But I don't think it would really be worth. Okay, let's take a look at the region. We've got Eskay Creek to the west of us, to the east of us, and they're pushing a 3 million ounce gold resource and a huge silver resource. Look just to the west of us, and at Snip, they're pushing a 1 million ounce gold resource there. So what would it take to make something worthwhile in between those two? Well, I don't think it would be worthwhile unless we were looking at, 500,000 ounces or something like that to start.
Okay.
With potential to grow.
Okay, I guess that's my point, because there are maiden resources and then there are maiden resources. And then it's a question of, do you move it on? Do you look to build that resource, or is that the point with 500,000 that you think you can attract someone, or you would want to try and attract someone? I mean, how are you going to play it?
Well, first of all, I think that there's a very good chance of, we've already identified a large opportunity for expanding the known footprint of the Anal deposit. So whatever our maiden resources, it's just a start, Matthew. And we're gonna be working on it in the years ahead. We're not going to vend it until we really see its true value. But that being said, I think that Skeena wants ounces. And they want a large land package, and they want to consolidate this district, or that's my point of view anyway. You'll have to talk to Walter to find out from the horse's mouth. But I think that the real model here is for us to develop this thing into something that's going to give real accretive growth and value to our shareholders. And in the end, that's probably going to look like some kind of property purchase or corporate transaction.
It's always a tough one talking to people like you, because you can't tell me what I want to know, because you got to play the game. We have spoken to Walter on a few occasions, and we will speak to Walter again, I guess, and he'll say very little as well. But I'm intrigued. I'm intrigued how retail investors decipher the language, because if I look at the rest of your portfolio, you're going to have to fund that somehow. So it can be dilutory, and you're going to have to raise more capital to do that. And I guess at this stage, that's probably to be expected. Or you push forward, I was going to say sacrifice one of your good assets just to be able to get a big lump of cash, or at least some sort of contributions, which allow you to develop all of the other projects that you've got, which you are equally excited about. So again, what's your preference in terms of how you move the company forward? What are the options you've got on the table?
Well, I think we're really in an enviable position right now, because we have lots of properties. They're in hot districts. We potentially have the opportunity to monetize some of those, one or more of those properties. That's not off the table. It's certainly something that we're looking at. We also have, the majors are sniffing around the Golden Triangle like crazy right now. We have the opportunity to share risk and reduce the cost of exploration by bringing in a joint venture partner for an earn-in agreement on one or more of our properties. But you know what? We also like the idea of keeping our shareholders exposed to 100% of the interest in these properties. And part of the enviable situation we're in right now is that even after this financing, we're going to have less than 40 million shares outstanding. So, we have lots of room to go to the market and raise more money if we believe that it's in our shareholders' best interest to maintain exposure to 100% of the upside on these properties. And we evaluate that on a property by property basis, on a deal by deal basis. So if someone offers us a very rich JV or a very rich purchase agreement, that's going to make a lot more sense. And it may make more sense than raising the money in the market. But it's also an opportunity that a lot of other companies don't have, because they don't have a bunch of properties, or they have a very large number of shares outstanding. So we've kind of got the best of both worlds at the moment. No one's gonna force us to do anything. We have serious options.
Right, and so how much money are you throwing at the exploration program? I mean, how many meters are you going to be drilling? What's the cost of that? And how much money are you going to be left with to do all of the other things you need to do?
Yeah, so we're looking at drilling about 6,000 meters this year, 3,000 on KSP, 3,000 on our Sofia property. We're pricing the drilling at about $650 per meter all-in cost at KSP, $550 all-in cost at Sofia. Those are probably a bit high, but it's better to, we haven't done exploration projects on these properties since 2018, and so we're estimating a bit high, just to make sure that we're able to do what we're planning. So that's going to come. That plus the geophysics and other work that we're doing to advance some of the porphyry targets is going to come to about just over $5 million. And then we have some plans for other types of exploration that we might do on some of our other properties. Those aren't quite as solidified yet, but like for instance, we have a property in southern British Columbia called the Coke property. This is adjacent to Kodiak Copper's MPD property, where they just made not just, but in the summer, they made a big hit on their gate showing really long intersection of high-grade copper and gold on a porphyry system. Tech supported their last financing at a high price. Our property is right beside theirs. Our property has the exact same mineral system at surface as what they're seeing at their gate showing. And it wasn't until they drilled deep underneath that they hit higher grade mineralization. We have the same opportunity on our Coke project, so we're looking at permitting that for the fall and being able to extend our exploration season as well as our results news flow season with a property that's in an area you can explore, 3, even 4 season. So this financing really gives us a lot of flexibility about being able to proceed with future exploration beyond just our current plans. And that's one of the things that's coming down the pipeline.
I guess what I'm trying to get at is I get the optionality. You get lots of optionality. When this, I assume you close this raise, it gives you more optionalities. But you got to be clear with the market about the order of play, where the value is going to be created, what the ultimate goal for you is. Because you describe yourself as an explorer, right? Okay, so you're not a developer by definition. And you're certainly probably not ever going to be a producer by yourself anyway. So how do you describe the road forward? 22, 23 million market cap today. It's early days, tight corporate structure. You did that tidying up a few months ago. It's all good. It's all good, and it's very exciting. But it's kind of like kitty in a sweet shop sort of level of exciting. It's like you gotta commit to a way forward. And so how do you describe the next 12 months to investors? I mean, we know what Skeena, maybe Adam want out of it, but what about us retail guys?
Yeah, well, I mean, I know what our retail investors want. They want increase in our share price. And so there's basically 3 value propositions for the near term for us. The first value proposition is simply accretive growth through building an asset. We're going to end up with a gold resource that we never used to have. Okay, and that's from the work that we're doing on our Enel project. And that is a serious thing that we're doing because it's in an area where there are mines And I think that, the landscape there is going to change a lot over the next 4 or 5 years. There's going to be new mines, there's going to be better infrastructure, and we're going to be right in the heart of that. And having that gold resource there is going to really matter. It's not just pie in the sky. The second thing we've really got going for us is our Castle property. And I haven't talked about that yet, but it's up in the Red Chris district in the northern corner of the Golden Triangle. This thing has tremendous exploration potential. It's along a 10-kilometer belt of mineralized intrusions that include the mineralized intrusions on GT Gold's Tatogga property, Saddle North and Saddle South deposits. Now, GT Gold just got taken out, or is about to be taken out, by Newmont, the world's largest gold miner, in a deal worth $456 million. Now, we have 6.5 kilometers of the 10-kilometer long trend that includes Saddle North and Saddle South, which is really what Newmont bought those guys for. What we know about those deposits is that the mineralization is deep. The high-grade stuff that makes it worthwhile is deep. So at Saddle North, for instance, it begins around 450 meters depth. Now, on our Castle property, there's been very limited drilling, about 25 drill holes in total. There's hundreds of drill holes on the other side of the claim boundary. And the average drill hole depth is only 250 meters. So if you only drilled Saddle North to 250 meters, you wouldn't have even hit anything that would have made you want to keep going barely. It wasn't until they drilled their discovery holes that were over 1,000 meters deep that they really hit the high-grade mineralization that makes that thing worthwhile. It's an incredible exploration opportunity. We're really excited about it. This is a property that could bring in a really rich JV offer. But there's way more to it than just that, because some of this really prospective ground is also overlapping with an area that we think probably would be super important to Newmont for critical mining infrastructure. Okay, so if you take a look at Saddle North, Newmont didn't buy Saddle North just to hang on to it. They want to mine that thing. And it's a big deposit. Okay, so there's going to be a bunch of tailings. There's only one place that we can see to put those tailings, and that's on our ground. So, the amount that they could save in capital expenditures by having access to our ground exceeds, I think, our current market cap. Okay, so there's a lot of value locked into our Castle property. And then finally, the third value driver for us, the thing that retail investors can be excited about in the near term, is, the fact that we're actually doing exploration. This company has not done an aggressive multi-property exploration campaign since 2017. So it's not priced into our stock or our market cap. And that's changed now. We have the money to do it. We have the technical expertise to do it. We've prioritized our targets. We've come up with our plans for this year. We're moving forward. And we believe that in and of itself will bring our stock price or our market cap into alignment with our peers. And like I said, our peers are trading at or have market caps of 40, 50, 60, 70 million dollars. And of course, then in addition to that and directly related to it is the discovery potential. When you're exploring for grassroots systems, or when you're exploring grassroots systems, oftentimes you'll make a discovery that will get the market really excited. So look at our neighbor, SK Mining, for instance. Those guys started the year, if you look at their stock last year, I think they were at like 20 cents, and now they're at like $2.30, something like that. And that's because they went to an area where there was some known mineralization, but it hadn't been well tested. They drilled it, they made some high-grade hits, and their stock just exploded. Well, that's the kind of thing that a lot of retail investors are interested in being exposed to when they invest in a junior explorer, the real pop that you get from a discovery. And we're exposing our shareholders to that through the exploration that we're doing on our Sofia property.
Right. Okay. It's when we have these sorts of conversations, and people can sort of name drop. We're like this, we're like that, but those companies have been through a process. And what I'm trying to get at with you, I mean, I quite like it. Obviously, Enel, the gold resource there, fantastic. It's a nice stake in the sand, and you go if somewhere between 500,000 ounces and more. That's good. People can measure you against that. They can also look. I mean, the story you tell about the Castle project is also very compelling on both fronts. And exploration, well, let's see what happens with the drill bit. So I understand the process better, but and I think what I've probably got out of today is the way that you're going to tackle it, the order of play, and what you're trying to be like. So that's been quite helpful here. But the precious metal market has come off a bit, right? You said we're going to focus on the gold. Copper's not doing too bad. $4, not too shabby. Do you see that maybe as an outlier? I know it's in the name, but should that be something that you look to quickly offload and just focus on gold?
I don't think so, Matthew. So here's the thing. Our share price is not where we want it to be even yet. And exploring for porphyry copper gold systems is expensive. You need to drill often deep holes, long holes. You need to drill a lot of holes to define a resource. And you often need to drill a lot of holes before you've even really made a discovery. So some of the largest porphyry copper gold systems in the world took 6-7 holes before the real system was hit that the explorers were then justified in looking at it from a resource point of view. So we don't want to do that kind of exploration this year because we don't want to do that from a financing that is at a low price. We need to get some rewards. We need our market cap to go up, and then we'll do a less dilutive financing that will support that kind of exploration. But let me tell you, in the Golden Triangle has some of the largest porphyry copper gold deposits in the world. Like, for instance, on Seabridge's ground, they have Kerr, Sulphurettes, Mitchell, and Ironcap. Together, those are the world's largest undeveloped copper and gold resources from a porphyry copper gold deposit. But that's just a few tens of kilometers to the east of our property. Now, one of the best ways to determine prospectivity for porphyry copper gold deposits is to look at the chemistry of silts that are in streams that are draining out of the catchments or the valleys where these deposits potentially lie. Now, there's a huge amount of data for these stream silts within the Golden Triangle, tens of thousands of samples from different drainages. And the ones that really light up in the Golden Triangle are Kerr, Sulphurettes, and Mitchell on Seabridge's ground, around Red Chris, Galore Creek. These are some of the largest porphyry copper gold deposits in the world. But if you look at our KSP and Kingpin properties, these are big properties, 640 square kilometers. They have the largest, brightest, most intense silt anomaly that's characteristic of porphyry copper gold deposits anywhere in the Golden Triangle, okay? And this is a region that's really underexplored for porphyry copper gold deposits because compared to, for instance, where Kerr, Sulphurettes, Mitchell is, our property used to be incredibly remote. It's about another 30 kilometers more remote than those ones, or at least it used to be. But now there's a road that comes down to and through the northern portion of our property. So it's not remote anymore. from an exploration point of view, from a development point of view, it actually has some of the best infrastructure in the Golden Triangle. So it now makes a lot of sense to explore this thing for porphyry copper gold systems, and that's what we intend to do. But this year, we're just doing it from sort of quietly behind the scenes with geophysics, geochemistry, getting our ducks in order, ducks in a row, so that we're able to really intelligently drill this after we do a less dilutive financing that will allow us to do that kind of exploration.
Right, but if that's the barrier for you, like you said yourself, it's an expensive, it takes a while, and you've got to drill deep. And the question I'm asking is, do you need to be the guys that do that? Don't you bring someone else in with a bigger balance sheet than you, and come along for the ride, and get focused on what you're doing at the moment? Because on the basis that you outlined, you're not going to be able to get to it anytime soon in any meaningful way, because you got to wait for your share price to appreciate, which hopefully through the gold work you're doing should happen. It may mean a less dilutive or less expensive raise next year. It may not, and that puts out the time frame which you want to, that you're going to be able to go and tackle the copper in. So you seem very keen and very passionate about the copper because the potential of it, but that's all it is right now. It's just potential. Why not try and monetize it sooner? Why not try and work a different way of structuring a deal and get someone in there and who can actually work on this thing? I mean, the copper environment right now is really, really strong. There'd be no shortages of people, surely.
Yeah. So, we're certainly open to the idea of having a joint venture partner come in and spend their bucks on some of these targets. We've just I wouldn't say we've completed, but we've done a really good job of outlining what these opportunities are. And that's taken a lot of work from our technical team. And we're now presenting that information to a number of potential joint venture partners. We have a bunch of CAs signed. So it's a possibility that we could do something like that. But you know what, Matthew, like, these guys are sharks, right? And if our market cap was $50 million or $60 million, they'd be offering us a heck of a lot of a better deal than I think what they'd offer us right now. So from the point of view of getting best return for our shareholders, we really need to look at getting our market cap up, whether it's to raise money to sole fund our own exploration project on the porphyry copper gold systems, or to bring in a JV partner. Good
point you make. It's a good point. They are sharks. I know. I understand what you're saying. When you're in a sort of stronger position, you can negotiate a better deal, and that's going to be better for shareholders. Hey, well, look, Tony, great run through. I mean, we only spoke some 3.5 months ago. Things have moved along. Good luck with the raise. That's good news if they can get that over the line, and stay in touch. Let us know how you get on, because obviously things are going well at the moment for you. Yeah, I'm excited to catch up with you again once we have some exploration results. I think it's going to be exciting days when we start putting out those results. What's the timing on that? Just give us an idea. We'll probably be putting out our first results in September, October. Okay, fantastic. We'll look out for those. Appreciate it. Thanks for your time again. We'll speak to you soon. Thanks so much, Matthew.